right, welcome back to the Tech Corner. I'm Senior Markets Contributor here with the Schwab Network, George Tsilis. Thanks for joining us once again. On today's Tech Corner, we're going to be covering Shopify Incorporated. Now, Shopify is a commerce technology company that provides a comprehensive platform to enable businesses of all sizes to start, scale, market, and manage their operations across various sales channels, including online stores, physical retail locations, media storefronts, and marketplaces. Now, the company's platform includes tools for managing products and inventory, processing orders and payments, fulfilling and shipping orders, sourcing products, leveraging analytics and reporting, as well as providing access to financing. Now, the company generates revenue through two primary streams: subscription solutions as well as its merchant solutions divisions. Now, from a subscription solutions division standpoint, this includes subscription fees to use the Shopify platform, sale of themes, apps, domain names, as well as point-of-sale hardware. Its merchant solutions encompasses payment processing fees through Shopify Payments, Shopify Capital, shipping, as well as other value-added services. Shopify's platform is supported by a robust ecosystem of app developers, theme designers, and other partners, which helps extend its functionality to drive merchant growth. Now, from a competitive landscape, Shopify faces major competitors offering similar e-commerce, merchant, and payment solutions. You may be well aware of major competitors in the e-commerce space like Amazon and eBay, other small players like BigCommerce. This is a company that provides a software as a service model similar to Shopify, focusing on growing companies and large brands. Squarespace, which actually went private back in May of 2024, is an e-commerce featured tech company targeting similar businesses and creators. Wix, another cloud-based development platform, as well as Block, symbol XYZ, which provides merchant payment solutions. Now, Shopify's unique value proposition lies in its highly scalable platform, which caters to both small businesses and large multinational corporations as well. It offers a user-friendly interface, a vast app ecosystem with over 8,000 applications, and comprehensive tools for omnichannel commerce, payments, and international expansion. The company's proprietary payment process, ShopPay, is noted for its fast conversion rates, enhancing the customer experience. The company also has a great ability to integrate solutions such as payments, capital, and global expansion, which makes it a preferred choice for merchants seeking to manage complex operations from a single platform. Now, going back to August 6th of this month, the stock actually soared around 22% after the company exceeded revenue and non-GAAP EPS expectations. Revenue for the second quarter of 2025 grew to $2.68 billion, up 31% annually. Now, non-GAAP EPS actually rose to 31 cents a share, beating the estimates, but also rising 31% year over year. Adjusted gross margin and free cash flow actually grew relative to 2024's numbers for the same quarter, beating street estimates. Now, more importantly, gross merchandise volume of $88 billion was well above the analyst consensus estimates of $81 billion. Also, an important note is international gross merchandise volume exceeded estimates, growing in the second quarter year over year by 42%, and this was driven largely by outperformance in Europe. Now, there are many positives to consider when looking at Shopify as a business and stock. First off, it has demonstrated strong global expansion, maintaining revenue growth above 20% annually, driven by its diversified software as a service business model and substantial cash reserves exceeding around $5.8 billion. Now, Shopify's revenue growth is well above the retail average, growing at around 25% year over year versus the sector median of around 7.5%. Now, operating leverage on the growing base of business is aiding margins, with EBITDA margins on a trailing basis at around 15.71% of sales. This is significantly higher than the sector median of around 10.61%. The company also boasts strong profitability measures with net income margin of around 23%, which is considerably higher than the sector median of around 4%. These higher margins indicate efficient profit generation as a percent of sales. Now, despite some of the positives associated with Shopify, we also have to address some concerns. Irrespective of recent strong financial performance, Shopify's valuation is considered excessive. It continues trading at a significant absolute premium compared to historical averages and competitors like Amazon. For example, Shopify trades at a forward PE ratio of 95.37 versus its 5-year average of 159.93. It's lower, but it's significantly higher than the sector median around 23.73. With this high valuation level, it leaves little margin for error. The other thing to consider is Shopify faces potential risks from trade uncertainties, which could impact cross-border e-commerce alongside the challenge of justifying its high market valuation. Now, lastly, Shopify's emphasis on small and medium-sized businesses also creates additional exposure to economic uncertainty, which may translate into high price volatility. Now, let's take a look at the technical picture for Shopify. First off, if you look at the chart, Shopify's chart formation indicates an intermediate term trend that is rising, yet it is still participating to the downside in the near-term market pullback. The stock has outperformed the market over the last 60 trading days when compared to the S&P 500. It has also in the last 52 weeks with returns of over 79% and year-to-date returns of over 28%. Upside momentum as measured by the RSI indicator is positive above 50, but momentum is beginning to slow as the stock has pulled back into a consolidation pattern since the first week of August. Currently, the stock is retesting the 20-day moving average, which may or may not prove to be a near-term pivot point for reversal and a trend continuation higher. A good rule of thumb to consider is that if the stock breaches the 20-day moving average on 2 consecutive trading days, the next line of support may come with the 50-day moving average. This moving average is positive and rising, which validates the strong technical condition for Shopify. Lastly, the stock is above the 200-day moving average, which is pointed up, indicating that the intermediate-term trend is bullish, despite the fact that there's some short-term weakness in the stock price. Now, in summary, we have to consider the vastness of Shopify. There are approximately 10,000 Shopify Plus merchants leveraging the company's commerce solutions. The company's unified software ecosystems enables merchants to run their businesses across all their sales channels, including web and mobile storefronts, physical retail locations, and social media storefronts and marketplaces. With the company's integration of artificial intelligence alongside robust international expansion, this may sustain the premium valuation, justifying the continued growth and investment potential for years to come. All right, that's it for this week's edition of the Tech Corner. Please join us next week where we're going to be covering rideshare giant Uber Technologies and evaluate the ongoing race to robotaxi and autonomous vehicle technologies. Thanks for joining us once again. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.